What's cracking, Ma? Thanks everybody for being here. So today I just want to take a minute and thank everybody. I realize, I don't believe necessarily in tough love. It works for certain people, but it doesn't work for everybody. So I'm very mindful of how I appear to you and what I say because what you're trying to do in the trading world is hard. I've lived it. So I don't ever try to mince words and make it sound like it's going to be easy. The things that you're going through, it's really you against yourself as much as it is you being involved in the market. The market's going to be there whether we participate or not. So to me, the real war isn't with the market. It's knowing how to eliminate and remove and have the willingness to feel who you are as a person when you put yourself deliberately in harm's way. That to me is the rub. It's not looking at, here's the 12 bullish chart patterns that you need to remember. And you're like, is that a bullish flag? Fuck does that mean anyway? That's all bullshit, right? That's again, taking you and steering you away from the important work. And so in the event that I have come across from time to time, maybe a little heavy-handed, it's not my intention to crack you in the head, but in a loving way. You know what I'm saying? So I just wanted to clear that. No one has written in and said anything, but, I am here to help. This is how I give back to the community. There's a lot of stuff that I haven't talked about, like my options trading. Just because I don't know that benefits anybody. But you grow and you evolve as a person, right? I had to take several steps back to take a half a step forward. Then I had to learn how to feel patient and say, okay, I don't have enough evidence as to whether or not I'm going to make it. See, I also had other revenue sources that I didn't need to put that kind of pressure on myself to make it or to know anything for sure. I don't think you're going to really know anything for sure, and that goes for life. All you have is the ever-evolving moment of right now, but things can change very quickly, whether you like it or not. And that's just the way it works. That's what I mean when I say life on life's terms. I did eventually learn foreign exchange. I did eventually learn a lot more about options, and from time to time I use them. I'm in an options trade right now. The answer to your question is no, I'm not going to go over it, not for free. That's for damn sure. My ethos here is to go over and give you the most valuable information for free, right? That's what you actually need. What you want is other stuff. For that, you're going to have to pay. I'm going to try to figure that out maybe going forward. But in the meantime, this is the most important work, whether you think so or not, and I'm willing to give it away for free to the extent that I have the time. You see me in these videos, and I said, happy Thursday. Well, today, recording this isn't the Thursday that you're watching it. Why? Well, because I have to find windows of time where I can get these done so that you have daily content. But I don't have time to do it every day because I'm actually very busy. But I'm still committed to wanting to help everybody. As it relates to your trading, and I kind of go back to the comments, you should look at this period of time as one of experimentation, which should be very freeing for yourself. It would help you change your mindset and not put so much pressure on yourself to look at like winning and losing trades and then trying to figure out whether you're making it or not. It's going to take you some time. Even if you're very experienced or you're institutional and you've been a directional trader and now you want to look at, say, intra-commodity spreads, it's going to require you to experiment. You can backtest till you're blue in the teeth, blue in the face, but it's going to require experimentation. Now, if you're at a desk and you don't like to suffer any humility because of the gossip in the office, I know that. I hear it all the time. We get a lot of clients like that because I'm in LA. I'm not in Singapore, Hong Kong, London, New York, where you're going to see me at the local watering holes with your peers or with your competition gossiping. So it's a huge advantage to being in Los Angeles in that I get to keep a very reclusive kind of life. But think about your trading as experimentation, because largely every day is an experimentation, even if you've been doing the same thing for several years. Why is that? Well, because the markets change. So you're really having, every time you put on a trade using systems and strategies that you've used days, weeks, and months before, you're still taking a leap of faith that it's going to work going forward. It's still a probabilistic outcome, even if you have success using the same strategy on the same asset class with the same time frame. So you have to be ready for the unexpected, right? That's a bigger problem on the institutional side, because it's difficult to accept that what used to work might not necessarily work now. But I would, if you're younger and if you're on the retail side, blocking out all the bullshit and, looking and trying to experiment can put you in a different mindset, that you're not necessarily concerned with any one particular result, any one month of result, for example, because it might not tell you all that much. You can't really tell. So, for example, if I backtested a basic system of breakouts in a trend following model, I might find that over 20 years, there's a 14% drawdown that lasted 6 months. So when you jump into a discretionary trading model and you're looking at the rules that you're following, how do you know that if I've backtested those same rules, I can't say, well, yeah, that's obvious. You're in month number 2 of a 6-month drawdown. That's going to be about 14%. See what I mean? Like, you can't make any conclusions whatsoever about the outcome of any one particular trade and pretty much the outcome of any 1 month of trading. You're emotionally invested in wanting to succeed, so you might look and say, yeah, man, I had a good month. I'm onto something. Maybe, maybe not. I got news for you. It's going to take some time. So don't get overexcited about stuff. In the same sense, you can't get all pissy if you're losing money, because it doesn't mean much in the grand scheme of things. So Roman asked a question, and this was on the Michael Martin Show, episode 18, with ganja, trading, and mental toughness. And eventually, after a lot of stuff, he says, I'm trying to test, since you hear again and again that you cannot influence your profits, I would like to know how you should pay your bills. They will come no matter how successful you were or not. Than from trading, right? There's a typo there. He says then from trading, but I think he means than from trading. Do the people who do this always have several annual incomes in case there is a drawdown? What did Bill Dunn do in the 2 to 3 years that he didn't earn money with the mechanical system? What did he live on during that time? Many thanks for your wonderful video. So if you are thinking about, wanting to make a living from trading, there's certain assumptions that you shouldn't make. One is that you're going to be profitable every month, or that you're going to take money from your trading account, i.e. your profits, to pay your bills. That never works. You'll only be trading with scared money. So that, and I'll talk about that, but I want to get to answering the question. You should probably have 6 to 12 months of savings of your bills put aside separate from your trading account. And I know most of you don't have that, but that's what it's going to take. Otherwise, you might get too invested in the short term of your short-term success and start to extrapolate that you're onto something. The worst thing you can do at that point is give notice, and now you've got $50K in a trading account and $4,000 a month in bills. That makes no sense to me, because now you have to do 10% of returns every month just to pay your bills. How are you going to grow your account? Because now you've set yourself up for some very, very arduous times, and that doesn't take into account what happens when you lose money, right? So you need to basically double your account every year just to stand still. That's an awful lot of pressure to put on yourself. Now, of course, you could say, well, I'm going to throw caution to the wind and I'm going to do it. And by all means, you'll probably learn a lot about yourself in the process. I just don't know that any good trading is going to come of it. Do you see what I'm saying? So most of these people have jobs, right? Full-time jobs that they may or may not like, but they're tolerable. They give them a sense of security. They also give them benefits. They help them, save for retirement. All that stuff is really important. I wouldn't necessarily wing that Because yes, your bills are going to come. Another question came in. I don't remember from who. Oh, Luis. I can't pronounce the last name here. Menenzens. I don't know. Let me see if I can get that correct. I apologize for not being able. I just can't see it because it's all stuck together. Luis Menezes. I apologize if I'm saying your name wrong. He left a comment a while back for a video. Oh, the one that most people didn't understand, and it was a Friday video, the difference between trading stocks and commodities. So how do you transition from any other work to trading? Well, you tell me. How are you going to do it? How are you going to pay your bills? Right? I mean, this stuff that you got to work out ahead of time. What can you do during the day or during the night, during the weekend to make your money so that you can put time into your craft? Because again, it's tricky. While I agree you have to start somewhere, paper trading is probably not. It's a step so that you can learn how to use the order entry system on a particular, trading platform. But I don't believe that it helps you manage risk in as much that you don't have any. You're not feeling the financial burn of risking real money and losing real money. Right? So I would find a way to get a funding source, right? Whether that's a job or whatever. But to me, that's a question that you would inherently know how to answer, right? I mean, there's a million ways to make the leap. As far as quitting your job and knowing that you're onto something, it's very difficult to know when the right time is to do that. Emotionally, that you want to do it tomorrow, right? But the truth is that even if you had a good year, and even if you were able to say, okay, here's the 12 months of the last 12 months, I was profitable 7 months, I lost money on 5 months, net, I still made money. What percent rate of return was that? What was your drawdown? In backtesting software, they also allow you to Monte Carlo your rules because you want to vary the start date, you see? Because the results that you would get, and the example that I always use just to really illustrate this is that, what happens if you sold the house and you had $100,000 in proceeds and you put that money to work on October 1st, 1987, or what would happen if you delayed it by a month and put that money to work on November 1st using the same trading rules, right? Obviously, you sidestepped the crash of Black Monday in 87, which would give you, if you were a long-term investor, very different results, right? Because you were starting from 0.0, which was 28% below where everyone else started, in the top of October. So, that's the trickier part. You probably need some time. That could be 6 months to several years of learning your craft, getting your confidence, and believing in yourself. So your emotional need is to become a full-time trader, but until you really see the data and have some third-party person look at it and can say for sure that you have talent, you should probably play that more conservatively. While I do appreciate the people like the guys who founded DreamWorks, right? Steven Spielberg, Jeffrey Katzenberg, and David Geffen, those guys were all billionaires, and none had a college degree. For every entity where that works, there's probably 10,000 people that don't make it. You see what I'm saying? Like, they had a lot of wind at their backs to turn DreamWorks into something big. They were also very, very successful individuals before they started their own production company. So you might want to consider, like, what is it that you need to have all the creature comforts that you want? Because if you make that leap, you don't have the right to complain, right? Because you did it to yourself. And I don't know it's too broad a question to say, here's what you should do definitively so that it meets everybody's needs, meaning everybody who's watching the show. I would play it, I don't know what I would do to trade, to make the trade-offs, to wanting to get into the business. I know what I was willing to do 35 years ago But today I'm of a different mindset. The world has changed fantastically. So I would just say, you need to feel comfortable in your own skin. It's probably going to take more time than you think, and it's probably going to take more time than you're emotionally comfortable with. Because in order to be sure, you really have to see a lot of data. A couple of months is not good enough to give notice. Because think about it this way. If you were going to say, here's my track record using what I'm doing, I'm paper trading, that doesn't count. No one's going to give you money anymore on paper trading or hypothetical results. Because the old saying in that allocation world is you've never seen a back test you didn't like, right? Because you can curve fit and cherry pick and data mine so that the system looks great. And how people behave with real money is I knew a guy who was part of a men's group. I don't know if I should tell this story. And he got an allocation from a big trader, and he started following the system. Maybe I'll tell this story. I gotta think about it. Anyway, he started trading the system as promised, and he went into a drawdown. And the rules were supposed to be, I think, 90% systematic, 10% discretionary. And after like 1 or 2 months, because the person went into drawdown, they flipped it and went 10% systematic, 90% discretionary, pulled the funds. So you never really can tell what's going to happen when you start putting on real money and have real risk, right? The pressures come from places that you might not fathom. So then you're putting yourself in a spot where you need to make money, right? You can see how this plays out. You don't have enough money to cover your rent. You have money in a trading account. Easiest thing to do would be take out some of that money and just pay your bills. But if you try to put on a hero trade, you might be taking on too much risk. So you run into the potential of trading too big, or then increasing your frequency because you're acting out of desperation. So you really have to project into the future, what are your needs going to be, so that you can better plan for the things that are going to unfold that you know about, but then have a contingency for when life throws you a couple curveballs. Having 3 months of bills is not enough. Any financial planner worth his or her salt will tell you that you want to have 6 months of savings to pay your bills just for life, right? So if you're going to try to trade and that's for people who have paychecks. When you're trying to trade and the outcome is variable and the outcome on any particular trade is probabilistic, you don't even really know where your next paycheck is coming from, literally and figuratively. All you know is, here are my rules. Here's what I intend to do. I'm powerless over the outcome. What happens if you run into a 2, 3, 4 month drawdown? Right? People don't think, well, that's not going to happen to me. I see other guys who have green days every day. Well, that's great. That just tells you from a data point that it is possible. It doesn't mean it's possible for you. You see, because you're not them, and your trading style and your emotional constitution are as unique to you as are your fingerprints. So you really have to think about, what is it that you're trying to do, and giving yourself the best possible runway to succeed, which is very difficult to predict, because people, in my experience, when they send me their ideas, they tend to be rose-colored glasses. They tend to be full of opportunities where they don't really consider a lot of the downside, because they just focus on what the good stuff that could happen. But you have to build that business plan around the worst possible outcome for every decision that you're going to make. And then if you can insure against that and have the cash flow put aside, to me, then you can do it. Now, there's trade-offs. Some folks are like, you know what? I'm going to start working nights. Well, that's great. So you get home at 6 in the morning and you're completely gassed. First thing you want to do is sleep. You don't even take your clothes off. And now you're supposed to come to the market and execute with discipline. It's awfully difficult to do. Some people say, well, I'm going to go wait tables at a fancy restaurant and work Friday and Saturday, right? Maybe pick up a couple dinners during the week. Doable, right? Because then you're available for the open. You're there. Markets close in the late afternoons. It's probably doable. but then you're giving up your weekends for the most part. And that's just the way, those are the trade-offs you have to consider. So having said that, I don't know if there's any, one answer or good answer, right? That's going to be a one size fits all kind of a deal. In the case of Bill Dunn, he was already a multimillionaire. He'd been trading since 1974. And so if he had a couple of years, he's a successful business person at the time. And I'm sure they had money in their cash account to pay their overhead. They were still earning management fees. They probably weren't getting incentive fees when you're in a drawdown, but you still get management fees. So they come in. So that means probably 10 to 20K coming in on a management fee basis, paid quarterly in advance for every million that they had under management, right? So you can figure that would be 10K a year for every million. If you had 10 million, that would be $100,000 in annual management fees minimum, maybe 200K if it was a 2% management fee, and that number's paid quarterly in advance. So 10 million at 2% is 50,000 every quarter in management fee to pay the bills. Maybe that includes a small draw against performance. I don't know. There's a million ways to chop that up. But this is what makes it difficult. If your goal is to make it, you can sit and overthink a lot of stuff. So anyway, I think I've exhausted this question. I appreciate everyone's chiming in about how to make it. The best you can do is put on real money and see how it feels. Write down what you intended to do versus what you actually did. See if you can explain the variance. And if you do that for every trade for years, right, you'll learn a lot about yourself when you're running real money. Doesn't have to be thousands of dollars. You could do it at the beginning anyhow, risking 10, 20 bucks a trade just to get a feel for everything. So that's what I would do, is kind of get in the game that way. But in terms of, you need a funding source. That's all there is to it. There's really no way around it. No way around it whatsoever. Like I said, I had a couple of revenue streams. And and so I was lucky in that regard, in that I didn't have the pressure. I could experiment a lot, not necessarily worry about the outcome of any one particular trade, but I was super vicious and honest with myself to say, okay, I looked at my trading results and say, okay, Michael, you have no skill in this particular area, but it's taking up 60% of your time. That's easy to go. That was foreign exchange. Then, we looked at options, and, again, that was plus or minus 5%, took a lot of time. Let that go for the time being. Then I looked at where I was making money that took me less time because I had a natural ability that was in stocks and commodity speculation. I looked at the results, enjoyed the aspect of leverage. You also don't need as much money under management when you trade futures. Of course, you'll have to figure out if that's appropriate for you or not. But because of the margins, right, which were less than they are today even, there were a lot of products that didn't exist. Like the E-mini didn't exist when I started. Then there were other things like, pork bellies that did exist that don't exist anymore. So contracts change to fit the times, to fit the volumes and the open interest. Margins can certainly change without notice. But I would say the moral of the story is to get used to experimentation and learn to understand how freeing that can be. Because in that process, when you're actually in the game, again, the best trading coach that you'll ever get is when you actually do the trading and you can learn on yourself. We can help you shorten the learning curve here, but you can still do it on your own like I did. To me, that's the best way to go. And if you don't have a clear vision on how you're supposed to start trading full time, you'd also need, probably 2 or 3 years of a track record to have any type of sense. It depends what kind of chances you want to take, but it also, do you have kids? Do you have a supportive spouse? Are you doing this all by yourself? Because you're going to need to communicate all your dreams and aspirations to a significant other who might have very different understanding how they want the world to unfold going forward for the next couple of years, right? So it's way too complicated to just give you a blanket answer and say, here's the way to go. But I think the more data that you have in terms of years of data, the hundreds or thousands of trades that you can review, the more sense of self you'll have. You'll understand who you are and how you behave over a longer sample space, which can only help you draw better conclusions, right? But only you really know what's best for you in that regard of how you're going to do it or wing it, or take your chances, you see? So anyway, very complicated question. There's a million ways to answer that. There's so many facets to this. Training is part of it, but it's not the only part. But I appreciate the questions. I appreciate your trust in your asking me. And I always try to speak from experience because otherwise it's just theory, and who cares about my theories on anything? I want to talk and speak to you from things that I've actually had to live through because that makes it legit, right? Thanks very much for being here, folks. Please like and subscribe, and I'll be back with you tomorrow before the weekend. Have a good one. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.